Yesterday, we looked at whether Bitcoin can be considered to be an indicator for stock market risk sentiment, and the conclusion was that yes. But it's probably a bit early to consider it a reliable indicator and not just a casual observational tool. Well, yesterday saw the Federal Reserve raise its policy interest rate by a half percentage point, its biggest hike since 2000. The immediate reaction saw pull off a 5% Bitcoin bounce back above the long-term trend line that has provided support for most of 2022. The S&P 500 bounced just shy of 3%, putting a bit of distance between it and the long-term support line dating back to May last year. The Fed also approved plans to start reducing its bond portfolio, which will ease monetary stimulus that has contributed to the rise in speculative assets, including stocks and cryptos. So the moves, in theory, can probably be considered to be counterintuitive, unless of course we consider the way that markets price future events in. Often, this is known as buy the rumor, sell the fact, although in this case, it's the other way around. And we should remember that the signaling about the Fed becoming more hawkish started around late November, when both Bitcoin and the S&P 500 were in and around all-time highs. Over the last month, the probability of a 50 basis points hike rose from 69% to nearly 100% on the morning of the announcement. This caused the market to become more bearish, with indexes and Bitcoin trading lower over this period. So why the rally? Well, Ben Lilly, token economist at Javis Labs, notes that Powell gave the market the expectation that future hikes won't exceed 50 basis points, and went so far as to suggest that future hikes would be around 25 basis points. He adds that the Fed has 5 FOMC meetings left this year where rate hikes remain on the table. That means that the market is expecting between 200 to 275 basis points by the end of the year, down from the 300 to 325 that was expected at the December meeting. That's a big shift in anybody's book. And it should be noted that the Fed's balance sheet reduction can be expected to take place at a slower rate than the market was expecting. And just to finish on an optimistic note, John Sidoli, head of market research at Synergy, notes that Powell also said that the Fed doesn't see signs of a wage price spiral that would embed inflation expectations, and that there are signs that inflation has peaked. He adds that the VIX, Wall Street's fear gauge, and now a key Bitcoin indicator, rose aggressively in the build-up to the FOMC, but has now fallen sharply to 25, with 20 being the key level from Bitcoin's perspective.